Hello everybody and welcome back to another episode of Adam Bergman's Money Makers. But ain't nobody making no money in this economy. Ain't nobody making no dime, especially from advertising revenue, and a lot of social media influencers are suffering. I'm not talking about me specifically, I'm saying in general. And the basis of this suffering is that large companies are paying less and less money or unwilling to pay the same amount of fees because you're not getting a bang for your buck. Now stick with me. I promise you I'm going to correlate this video to the current recession and the current bear market, and I'm going to correlate it to a couple of different companies. Specifically the company that specifically with earnings that came out from Snap Incorporated, which is the parent company of Snapchat. Now they brought down the entire market. As you can see, everything is in the red. I'm reading a bunch of different articles. Stocks sell off led by tech. Stocks fall pulled lower by technology sector. And then it says S&P 500 fell 1.5% early on Tuesday afternoon, narrowing earlier losses. The Dow Jones fell 0.7%, while the tech-heavy NASDAQ, surprise, surprise, mother effers, nobody is surprised, is down 2.7%. Investors are considering a range of signals as they try to map out the trajectory of the U.S. economy. I can tell you where the trajectory of the U.S. economy is going, and it's going down. I've been telling you, we're in a bear market. We are currently in the recession. The first quarter, we had a negative GDP. This quarter, you bet your bottom dollar, we're going to know in third quarter that quarter two, where we're living right now, is also down, which technically makes us a recession because we have two negative growth quarters. A bear market, a recession, is going to last around 12 months, if not longer. It could be shorter. Of course, I don't know, and I'm just going by history. I think we are at our second half of this bear market, our second half of this recession, or getting towards the halfway point of the recession, and things are going lower. I told you this in many of my videos. Things are going lower. I just don't think that the pain is going to be as much as the pain was before. NASDAQ is down over 30%. S&P is down 20%. So I don't think S&P is going to go down another 20%. And I don't think NASDAQ is going to go down another 30%. If I had to throw a number between them, I would say that they're probably going to go down between 5 and 15%, which is in correlation of what I've been saying in my other videos. The interesting thing that came out today was actual Snapchat. Snap shares fell 40% Tuesday as investors digested comments that the microeconomic environment has deteriorated more than expected. Worries about distributions to Snap's advertising revenue rippled to the other tech stocks. Meta platform is down 9.3%. Google is down 6.7%. Everything is down. And this is the actual article from Snap. By the way, I have Wall Street Journal, and I'm happy to pay for Wall Street Journal, Barron's, Bloomberg, and Seeking Alpha, amongst other publications, because times are hard and it's not easy to pay for all these subscriptions, but I'm happy to do it to give you guys the newest news possible. And in return, can I please ask for a like, a share, and subscribe if it's not too much trouble for you to hit that little button. Snap issues profit warning, slows hiring. Pay attention to slows hiring because this is correlating to a lot of companies right now. Snap Inc. issued a profit warning on Monday and said it planned to slow hiring and spending, adding to adjustments social media companies are making to adapt to distributions in digital ad marketing. Guys, if you've noticed, like 2 months ago or something, in the beginning of the year, Andre Jick, Financial Education, Meet Kevin, and Graham Stephan, they all made videos, which is funny because they all make videos on the same topic. One of them will say something and the other ones will follow up with videos. They all said that advertisement is down. They're not making as much ad revenue as they did before. And that's true. Not only is the ad revenue down, in my case as well, but a lot of other social media influencers are saying the same exact thing. But besides for the actual ad revenue, and that's how you get paid on YouTube, you also get promotional work where people ask you to do promo work for their cryptocurrency or their trading platform. Speaking of trading platforms, I have a link down below to Webull. If you guys want some free stocks in these crazy times, why not take advantage of it and get something for free? If you want to sign up, the link is in the description down below. If you don't want to sign up, whatever. So a lot of people are not making as much money from the ad revenue, but they're not getting as many promotions. I have a crypto channel as well. Link is in my description below. And in that crypto channel, I remember like 3 months ago, I was getting, not even like 2 months ago, I was getting promotions like several a week. Those promotions are far in between now. Nobody wants to do it. And I spoke to a lot of my partners or a lot of people that I've been working with, and they basically say it's bang for your buck, Adam. And they're saying that they're not getting as much back when they're putting the money in. And this seems to be like a revolving topic among all corporations, from huge mega corporations and smaller companies, startups, things like that. And they don't want to pay for advertising because they feel that they're going to need the advertisement budget at the end of the year and try to make up for all of this lost revenue right now. Or they feel that the economy is just so shitty that nobody's going to be spending money no matter how much marketing you spend your money on. And they're saving it for like probably Christmas or closer to New Year's or some holidays. And that's all good. It is what it is. But they're just showing you how everything trickles down. Now, Snapchat did bring down their revenue expectations that they only set about a month ago. But besides for Snapchat, there's other companies that are coming out and also saying that there's probably going to be hiring freezes. Where's those hiring freezes going to come from? Companies like Target, company like Walmart. Why? There's less demand from people buying things up. And they actually have a big problem with the bottlenecking of the supplies, that they actually have additional supplies on their shelves, which means they're probably going to have to reduce the prices of those items. Maybe that's going to let us breathe a little bit with this inflation. But Target, Walmart, things like that are like necessity goods. Other stuff is still crazy inflated with the price. The problem is Target and Walmart are missing on EPS, earnings per share, but they're beating revenue. What does that mean? If you beat revenue but you miss on earnings per share, most likely people are still buying, you're still making money, but you're making less money than you're supposed to, which means that your margins are shrinking. Why are margins shrinking? And everybody's saying the same thing. Snapchat is saying it, Walmart is saying it, Target is saying it, everybody across the board is saying it in their earnings if you guys are paying attention. And the main driving factor is quite simple. If people are spending, and they are spending, the cost to get these goods and to sell them to the consumer is much more expensive. What does that mean? Gas is more expensive, delivery is more expensive, stocking is more expensive, and most importantly, wages are more expensive. Now, I did make a video about the wage spiral. If you guys want to know about the wage spiral, I suggest you click on this link right here. But the wage spiral is quite simple. It says that if inflation, let's say, goes up 10% and I'm your employee, I want to come up to you and say, hey, boss, can you please raise my salary by, let's say, 10%? You're going to say, no problem. I just raised your salary by 10%. In turn, you will raise your prices not by 10%, but by 11%, because you're going to compensate yourself for the compensation you're giving and then some. That worker then is spending money in the economy, but then the economy goes up not 10%, now it's 11% on top. So that worker is going to then go ask the boss again. And it goes on and on and on between different workers, different employees, different industries. And that's how inflation never stops. And there's something called a wage spiral, which gets out of control, which essentially means no matter how much you pay somebody, they're never going to catch up to inflation, because the more you pay somebody, the more they spend. The more they spend, the more inflation goes up. The more inflation goes up, the more prices go up. The more prices go up, the same employees are asking for more money. And this is called the wage spiral. Guys, there's no way, shape, or form to make this look good. You gotta pick your play and you gotta stick to your play. Yesterday, I told you that I sold out of my Google, my Microsoft, my Amazon, my Walmart, and things like that. And I was able to free up a nice 5-figure reserve that I am gonna put into the market. I am gonna be buying. And I didn't sell out of all my positions. I just sold out of certain ones. And I'm gonna be putting this money into positions that I truly believe in. Tesla, Palantir, NVIDIA. Probably more so NVIDIA and Tesla, because I already got a bunch of Palantir. I already got enough Unity, although it's becoming crazy cheap as well. There's crazy bargains out there, and what you guys got to do is pick your positions, as I just said. Figure out when you think the market is going to go down. And if you can't figure that out, just dollar cost average. Like literally, if you have $1,000, deploy $100 a day or $50 a day or $20 a day for however long you think this is going to last. I honestly think this is going to last for another 3 to 6 months with barcoding down, barcoding down. There are going to be a lot of dead cow bounces, but I think that we have another 3 to 6 months of suffering. But the next 3 to 6 months are not going to be as heavy as the last 3 to 6 months. Why? We have the worst start of a stock market for the first quarter and almost nearly a quarter and a half now that we've had in history, period. The worst for the NASDAQ, and I think the second worst for the S&P 500. Which means since we had an accelerated decrease, I'm hoping that we're going to have a smaller amount during this recession, a smaller amount during this bear market, and then we're going to have a speeded up recovery back. What causes recovery? Several things, and it's not just one thing, it's several things. Number one, you got to get inflation down. Number two, you got to get the wage spiral under control. But in terms of specifically stocks and specifically crypto, there comes a point where things become so stupid cheap that people are willing to buy it, no matter what is happening in the economy. And that point is very close to where we are right now. That the prices are just so cheap that nobody can avoid it. The prices are so unbelievably cheap that you just have to make your plays, you have to buy, and you have to hold. And when that point happens, it starts going from FUD, which we have now, we're in the FUD stage, to it starts going to the FOMO stage, fear of missing out. FUD, fear, uncertainty, and doubt. FOMO, fear of missing out. And when FOMO outpaces FUD, this is when you're going to have a strong recovery. Unfortunately, we have to suffer a little bit more. I mean, there's not much I could say. I hope this only lasts for the next, 3 to 6 months. I don't think this thing totally lasts in the next 12 months. In the next 12 months, I think that we're going to have a much better economy. I think we're going to have a completely different type of conversation. And I think we're going to be on a road to recovery. But remember, recovery does not take one day, right? If the bear market was 1 year, it doesn't mean recovery is going to take 1 year. It could take several years for that recovery. But in history, the bull markets outpace the bear markets for a minimum of 2x time. But it's not as, as strong, as sharp, the bull market, and it might be like this, as opposed to right now, the bear market's up. Guys, if you like information like this, definitely click on this link right here. I'm not a financial advisor. I'm just a purely entertainer and educator at best. Give me the like, shares, and subscribe. Let's go.